Alright, what's up guys? It's Tyler here, and it's been a while since I've done a video, and decided to show my shit. I just did word vomit just now. Decided to show my face this time, and what we're going to be doing is taking a look at some Nasdaq futures. I've been doing some futures trading thanks to Apex, what is it called? I keep forgetting what it's called. Apex Trader Funding, that's what it's called. I'll put a link in the description below. All I have to do is sign up for basically a simulated account, and once you earn enough, then you can be a funded trader. And I just became a funded trader today, basically. So that's exciting. We'll see how long that lasts. But no, it's as long as you're doing the right TA and you see, the economic drivers coming up, you should be good. So, and that's what we're going to open up with. So we are going to go over here and we are going to check out what's going on with the economic calendar this week. So, all right. So this is my favorite site to go to, which is Forex Factory. All right. As you can see, not much going on tomorrow, except for we do have President Lagarde speaking from the ECB. We'll see what she has to say about possible rate cuts. If they are signaling rate cuts, then that could, I don't know, possibly signal us to have rate cuts too. It could possibly signal us not to have rate cuts. It's going to also depend on what's going to be happening the following day. That's what's going to be the biggest driver as far as everybody's economic situation is concerned. As down here, we do have, for the US, we have a flash manufacturing PMI, flash services PMI. We also have new home sales and Richmond Manufacturing Index. Now, as far as fundamental analysis for these kind of things, there is one person I would suggest checking out on YouTube, and that would be the Meet Kevin channel. Meet Kevin channel, he does a lot of great fundamental analysis. And he can kind of give you the lowdown on, and he actually does a market open every day, which is he's in California, so it'll be 5:30 his time. It'll be 7:30 Central, 8:30 in the morning as far as Eastern time. So I am in Central time, so it is 7:30 for me. And he goes all the way up until the opening bell, and a little bit past that because then he has his own courses and stuff like that. But Tuesday we do have some flash PMI services, and so we'll see how those numbers pull out. After that, Wednesday, what do we have for Wednesday? We have retail sales, core retail sales, core durable goods, and durable goods orders. Um, those could be some decent indicators to see where we're at. Now, Thursday is actually going to be a pretty big one. We are going to have advanced GDP quarter over quarter, as well as unemployment claims at the same time, as well as the advanced GDP price index quarter over quarter. And then just a little bit later, we're going to have the pending home sales month over month. As you can see, with the expectations of this, we are looking to come in, as far as the GDP is concerned, a little bit below expectations as far as quarter over quarter. But for the GDP price index, we're looking to come in a little bit higher. We'll have to see how those play out. We'll see how the market reacts. Again, your best bet as far as understanding how that is all going to work, I'm going to refer to Meet Kevin. I am more of a technical analysis guy. I am not much of a fundamentals guy. But I do look to economic drivers to find out what is going to be driving, or what time to be trading, because those are going to be the times to trade, is when all this news comes out. And then that's pretty much it. Friday, I don't think we have much going on. We have the Bank of Japan coming out, but that will probably be, I don't even know when that's going to be. It's just tentative. But we do have at Friday at 7:30 a.m. we have core PCE price index. Not for sure how much that is going to be much of a driver, considering we are expected to be right at the same exact spot at 0.3%. If we end up at 0.3%, probably not much is going to happen. So that is what we're looking at. We're looking at probably the days Tuesday, Wednesday, Thursday to be your biggest days. I would say Tuesday and Thursday if you're looking to make some decent trades. Um, and so now let's go ahead and check out what's going to happen or what could possibly happen with the Nasdaq. Now, to understand what's going on with the Nasdaq, you do have to check out the CFDs because the CFDs are actually going to give you a historical look as far as where the Nasdaq is concerned because the futures won't go as far back as where is this 2022? Yeah, the futures won't go back that far. So, as you can see with 2022, the high back then, or 2021, I should say, was about close to 17,000. We dipped then. We didn't make a breakup for it until back up until 2020 or 2023. So it took about 2 years for us to get back up to that area. We did break above it. We closed above it. We ran back down. All right. And what we did is we touched a bullish order block. Now, bullish order block is where you have the where you would have a candle that would start at the top, run down to the bottom, and then break up higher and then close above it. Once it closes above it, that is considered a bullish order block. Bullish order block basically means if it trades back down to it, expect a rejection off of it. So, and that's exactly what happened here earlier this year before we had this huge run all the way up until recently, up until early or late March. And then we started having a little bit of a consolidation. And then within the last week, we had, boom, a huge fall. Now, a lot of people are saying this could be due to, geopolitical things. It could be due to the inflation reports that we had. It could be due to a lot of things. I personally just take the route of technical analysis. Why? Because it ran down and touched exactly the next bullish order block that was sitting just above the previous high. So it broke the previous high, closed above it, right? And then moved down and then ran back above that and closed above that again. So what are you expecting when that happens? Eventually, it's going to come back down and touch that same exact spot. And that's exactly what it did. I personally called, let me see here, if I can even find it on my own Twitter. Uh, I'm not trying to get too much into the weeds here, but if I do go to my homepage, I think I did call 17.5, where I thought it would actually be getting down to somewhere around in there. Yeah, okay. So 17,586 is where I thought it was probably going to end up landing. Um, and that was my chart for it. And the reason I thought 17.5, it just broke below these two equal lows. You're still in fair, and also here is a bullish order block over in this area to the right, somewhere around the price of about, let me see here, what price is that? No, a little bit, about 17.8 something, 17.823, pretty much right where it's at. And just a little bit lower, wherever that low ended up being on that day. Um, that's where I thought it was probably going to end up being, or actually a little bit lower, because I thought it was going to end up bouncing off of this blue line here, which I show as 17,586. Ended up dropping way lower than that to this blue line that I have down here, which is 17,165. So um, that is where it ended up going. I didn't expect it, but that is exactly where it ended up going. So now if we go to today's futures, all right, so that 186 line that I had, or 117.1, whatever it was, that was right in between two different, I guess you could say that would be an order block as well, where that big red candle goes down, right? That big red candle goes down and then breaks above. That would be your bullish order block. And now it did bounce off that, and we're starting to see at the very beginning of the week a little bit of a push up. Now we are in discount territory. Discount territory means that basically at 62% or 61.8% on your Fibonacci from your last low to breaking the next high, which was right here, ends up also being right at the discount price. That would be from your low to your high of your Fibonacci. A lot of people want to put their Fibonacci way down here or something like that. But the correct place to put a Fibonacci is at the previous low before breaking the most nearest high. All right, so if you do that, then you break below the discount price, which is where institutions like to buy. And it seems that institutions are starting to buy. Now, where do we go from here is the next question. That is all going to depend on what kind of news drivers we have. Personally, I see this bouncing up until we hit, as a technical analysis anyway, uh, until we hit something along the lines, I don't think it would hit just below discount, but something maybe along this, equal this low right here. That's where I thought it may have went before. That's somewhere around that 17,600 area, just around your 50% mark. That could happen today, could happen Tuesday, because I think tomorrow may be a slow trading day. So we may get a slight uptick tomorrow, and then tomorrow we may see a little bit higher of an uptick. We may see even a drive above that. This is on the daily chart, by the way. So if we pull this even out even further, um, you can see that there is basically hardly any fair value gaps except for this current one that we had ending the day on Friday. So it could pull up, fill this fair value gap, close the day on Friday somewhere around in here, which would also be a bearish order block, bearish breaker type scenario, where these lows formed, right? Um, Let me see if I can get a good read on that. So somewhere around, where was that at? That's about 17,450, somewhere around in there. Um, I would think it might end up closing somewhere around there on Monday. And then Tuesday, we will have to see what kind of numbers that we get with the PPI. Um, and then it could make a quick run up and then a drop again. Um, or what we could see is we could see it stalling and then make a quick run down, break below this low right here, which would be your liquidity line. This is where you're gonna find all your retail people that are gonna have their buy limits and stop losses, or sorry, your buy limits and your I can't think of the word right now, but I should know it. But yeah, a lot of buy limits set right here for everybody. It should break through that. and then kind of fake people out and make people think it's going to start breaking downward. People start selling and then possibly break back up depending on what kind of numbers that we get. And then what I do see is I do see a daily fair value gap that we could be heading toward right in this area. All right, and that's kind of the goal I see toward the end of the week, if not before the end of the week, right? It could break through that, hit a bearish order block, a breakdown back into it, and then possibly break back up. Like I said, it all just depends on these economic drivers that we're going to see. But I do see this week being a positive week, um, just depending again on those economic drivers. I don't see how we can continue. I mean, this was a pretty large pullback. A lot of people were going, "What the heck is going on in here? What's the news about? What is this about?" I don't think it had anything to do with news. I think it had everything to do with technical analysis and the price wanting to come back and fill this void that it had left for so long. And now that it's finally come back and filled that void, now we're finally can be on the path to upwardness. Now, how long is it going to take for it to do that? Um, Again, that's all going to depend on the economic drivers, but I did want to give at least a quick short video on what to expect for this week. So, with that being said, that's all I got for right now. And hopefully, this helped out and helped you out as far as what to look for the rest of the week. And we shall see you soon. Thanks a lot for watching Bodies and Wicks. See you on the next time.